financialbulls.com, and I'm here with your biweekly market recap along with some setups for the following weeks. Sorry, first of all, I want to apologize for my hiatus the past month. It's been crazy with the end of school. I've had a lot of work, finals, SAT, but I can finally do it because it's summer, so now I can do this recap. So to start out, this is a chart, 6-month chart of the S&P 500, the index that we commonly use to gauge the overall health and direction of the market. I think last time we did a recap, it was this day right here on Friday, May 15th. And as you can see, we broke out to new highs following that day, and then past that key resistance level at 2120, we retraced, so that was sort of a false breakout. And now we've kind of been hanging in this area, and recently we've had a nice 3 or 4 day run up into that previous 2122 level, which was previous resistance. And right now you can see on the monthly chart we're kind of been struggling with that level as we've approached it. Now we've gone above it and we've gone back down, but it's not an exact level, it's around this area. There's been a lot of overhead supply. So we'll see if we can get past that and then hopefully head back to these prior highs around 2134. And right now for the overall direction though, we are above the 10 and 21 day moving averages, which I like to use as a short-term gauge of direction. And usually you want to be long stocks above those averages, as I said before. And you can be long stocks that are below, you can be short stocks that are above, but you have to, I think, have a good reason to do so. So right now, we're kind of waiting, and I would wait for a clean break above this key level, preferably a close above that level, in order for me to remain confident that the bulls can take this market higher. And, a notable sector that's been leading the way, the IVB, these are biotechs. A lot of traders made a lot of money here. As you can see, you could have bought this breakout out of the consolidation area back into the 21 day. So it was holding above the key averages, and then it had a huge day here last Thursday, and it made an all-time high on Friday. On Monday, at a high of 383.54. So I think it may need some short-term rest, and you may want to wait to pull back and probably go back to the 10-day moving average around 371, preferably the 21, around 367, and then I think it's back to new highs. The trend is definitely up. And as you can see, biotechs have just had a crazy 2015, a crazy 2 years. So now to go some individual plays, to review the plays that we did a month ago almost. We had El Paso Electric, and I notified it right here. And then I had a nice 3-day run up, but unfortunately it did roll over, and you probably would have lost money if you went long this. I was playing the false breakout, didn't work out, it happens. A play that worked, Delta Airlines. I saw this right here. Stock couldn't hold above 47, 48 level, came back down, big red bar, heavy volume, and then the stock just rolled over. So that was a nice play. From the short side, Discover Financial Services, notified it right here after it had a false breakout, tricked a lot of traders, and then just rolled over as well. And then lastly, TECO Energy. Where did I see this? I saw this after it came below this 1856 level, which were the March lows, rallied above it, and actually had a nice extended rally from about 1860 to 19, small rally, and then that also rolled over as well. But it's getting a bid here, actually, after another false breakout at 1773, and a nice red dog reversal, which you always like to see. It was extended away from the 21 day, so that makes sense that that's rallying now. For some plays for the coming weeks, and for the coming week actually, this could be 1, 3, 5 day plays. I'm looking at WBAI. I like this stock just because it's very strong. Obviously, it's gone from 750 to 28, and while that may seem like it's overextended, I mean, it looked like it was overextended when it was trading from 750 and it went to 1743, but it kept on going higher. So you don't want to fight this trend. It's much easier to go with it than to fight it. And right now it's pulled back to the 10-day moving average. It's been consolidating. And on the monthly chart, what I see is that as long as it holds above this zone right here, which is formal resistance, now support, and this prior low around 27, and above the 10-day moving average, I'd be looking to buy. And this is an hourly chart. Next, we see, I was looking at Netflix. Also, similar pattern. As you can see on the 3-month chart, it's just been riding this 10-day moving average. You could buy breakouts after these levels, here, here, or you could just be buying the dips into the 10-day. So it had a nice day on Monday, into the 10-day, been consolidating. Now see on the monthly chart. Well, I guess it's not as clear there, but as long as it holds this kind of trend line right here, then I'd be a buyer. So that's your key level. Definitely, yeah, that's definitely your key level. Orbotech, kind of an unknown company, but they're nice looking chart. Closed above the 10-day moving average, had a nice dip below, strongly trending stock, and I think if you could, buy the open today, it could make a run toward recent highs around 22.35, and if it continues this trend, then it could go higher. So on the monthly chart, here's the level, key level, on the hourly. So it came below, couldn't hold it, but then had a nice green bar above that. So as long as it stays above this level, you're in. Below that level, I'd say it's below the 10-day moving average. It's below key support, so I'd get out. But right now, it looks like the flow, the momentum, is to the upside. Another play from the long side, Bank of America. This simply just pulled into the 21-day, had a nice day on Monday, along with the rest of the market. And I think it just holds, this key trend line right here and the 21-day, then it'd be safe to be on the long side. And it's also a big cap name, so it'll most likely follow the market predominantly. Next is MTOR. MTOR is a play that I'm looking at from the short side, and excuse me, while this isn't a clear downtrend, it did break a clear intermediate term uptrend, which was unhealthy on the 9th, June 9th, and then since then it's kind of been weak, and right now, as you can see, it's kind of rolling over, and it's for the first time in a few months, well, 2 months, it's below the key moving averages, and it's rallied back above into those averages. And on the hourly chart, you can see, I think it'd be okay to sell into this rally, and your key out would be above the 10-21 days around $14. So you have your defined risk, but it's not looking healthy. So I think this is a play for the downside. Another play, CSTM. As you can see, I don't need to say anything about this. It's pretty obvious. It's been riding the 10-day. Stock's been hammered, and now you kind of had a weak rally back into that 10-day. So I'd be looking to sell on any bounces, including this one, for potentially nice continued down move in the direction of the underlying trend. Next play is PGTI. This one's a little bit unique. So you see, I actually noticed this flag kind of at the 10-day, and then it rallied from pretty nicely from 13.30 to a high of 15.30, so $2 per share on a low price stock like this. But the reason I'm looking at this from the short side actually is because, as you can see here, the stock, when it gets too far above the 21-day, it kind of rests and pauses back. And I just noticed it was here on Friday, the high was at 15.35 and the 21-day was at 13.46. And I mean, the 21-day isn't a 21-day exponential moving average. And if you think of stocks like rubber bands in a way, where if you get too far away from the mean, the prices tend to revert back to that mean because they can't stay too extended from that mean. So basically it just means stocks go up and they go down. They just don't go straight in one direction forever. And it had a down day when the market was up on the 22nd, so yesterday. So I think like this could maybe rest a little bit and even come back to its 21-day around 13.64. So this wouldn't be a momentum trade. This wouldn't be a trend following trade. This would be more of a mean reversion trade. So that's it for the setups that I'm looking at. So you have great setups, I think, like in this market, and this is a very nice market to trade right now. Also, I just want to touch on this. I just think this is the coolest chart. Ambarella. This has probably been one of the most talked about stocks the past month. Just had an insane rally from 71 to 126 the past month. And then it got hammered down 20% after a prominent research firm on the street placed a $60 price target on the stock, and of course that hammered the stock when it was trading about twice that level, so around 120. But I just think it's important to know that you could have been riding the 10-day here, buying this momentum, but this day would have probably, if you used sound risk management principles, this day would have gotten you out of the stock. As you can see, the trend line that was going up from the rally was sort of, sort of right here on the hourly. This was the close right here. It was violated, and then the stock just got hammered again. So the reason I'm showing this to you is because you have to honor those risk management principles and make sure that when a stock isn't acting nicely, and obviously this was the biggest red day in months, then that signals some short-term complexion change that if you're long, you should probably sell, and if you have the ability to go short, it probably makes sense to go short there. You want to wait, and obviously there are people who tried to short here and just got slaughtered. And well, I think it's okay to short into rallies like this. Any strategy can work. I'm sure there are traders who love to sell into strength and who make livings off it doing that. But I think this was a pretty obvious sign that a day like this could occur. So while it primarily was that research report, I think that the effects of that research report were exacerbated and were just magnified because of the current chart and the huge run-up that the stock has had. So that's just an interesting stock. I know I'm not going to be trading this. It's just entertaining to watch what's going to happen and to draw some learning from it. So back to the S&P 500. This is the chart. I'm thinking it could probably test new highs. It could maybe retrace a little bit, but they're individual stocks, whether it's a Netflix, whether it's a CSTM to the downside, that are presenting great opportunities for you to trade. So thank you for watching and happy trading.